The drop in FDI into China in the past couple of months, was that down to China Plus One diversification? Was it supply chain relocation? And is that a trend that is going to continue? And if bilateral relations and trade tensions really become materially worse, then is fully fledged capital flight a cause of concern?
Well, look, I think the first thing to say is that the FDI problem is not a China problem, it's a global problem. There's been an 8% decline in FDI flows globally. So we're obviously looking at China today, but from our perspective, because we're working across the world, across all of the flow corridors, this is a global problem. This is a global challenge, a global headwind. And I think as I said, some of the executives we talk to do see it as temporary. A significant majority of them see it as temporary. Now, how temporary, we've yet to see. And as you said earlier on, the fundamentals for the Chinese market are very, very strong. It is a huge market. There is a continuing development of a fairly wealthy middle class. Lots of opportunities for organisations outside of China to achieve real returns on sizable returns on investment into the country. So the strong fundamentals will persist. There's absolutely no reason to think that those won't. And as I say, I think the problem sort of being focused on as a China problem is slightly misleading. I think once this view that the current gyrations are temporary, once the situation levels out, those fundamentals, the big market, the strong policy continuity, that is the most important thing for investors, is a level of confidence over the long-term environment into which they'll be operating. Those things will really play into China's hands over the medium term. And I think many of the organisations that we work with outside of China still look enviously at that marketplace, and it will be a matter of when rather than if that they decide to enter that market.